I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, after the market panic yesterday and the wonky market that we're seeing today where it's pretty much flat, I'm wondering, what should you do when a single tweet can affect the market?
I know, and that's why we have said, listen, we've made all our sales. We have plenty of cash. We think it's too late to sell. Is it too early to buy? I think given the Twitter sphere and the nuttiness that we have, and never seen this before, I would prefer, after all, we've raised the cash, let's watch. It's okay to sit in your hands. It's not okay to sit in your hands if you haven't raised cash. That's something you can afford to if you've done what we've done. So I'm not saying we're necessarily in the catbird seat, but we are looking. We did not sell a lot of the stocks. We sold some of the stocks where we felt we were too big after a remarkable 20% run. Now let's watch. Well, you have to watch in a world. Let's say the president says, I've had it. He's prone to peak, and we will be ready.
Now, I want to remind everyone that Jim has a great Real Money column this morning on China and trade. You got to go check it out on realmoney.com. Jim, let's switch gears. I want to, for an investor who's watching this market, who's seeing all the panic, what should they be doing? What is your first piece of advice?
Well, panic never made anybody any money, okay? It never made a profit for anyone. So at this point, if you've done no sales, you're getting a little bit of lift in the market. So maybe you can go back and look at some of the things we sold just to be sure that you have some cash in case we need it if things break down at 12:01. Now, I'm beginning to think that there's probably a third way between in the 20%, 25% tariffs, immediate at 12:01, and peace by Chinese cave. There's a third road that might be taken, which is, look, we're going to gradually put them in place because we accept that there was some good faith. But you have to know, from the people I talked to who were negotiating, there was a 100-page document, and they were reneged. The Chinese reneged on about 50% of it. And so it wasn't like our side suddenly got more belligerent. It was their side walking away from a deal that they agreed to. No wonder we got angry. I would too. Imagine buying a house and right before the closing, but when you've agreed, you said, look, you know what? I'm paying half for the house. Well, we would all feel outraged. We would tell you, get out of our office. That's kind of what happened.
Now, Jim, I want you to treat me like the millennial that I am, and I want to walk over to the tape and read it with you.
Well, I'll treat you like any age that you are. Okay, well, let's take a look. All right, so you've got Goldman Sachs down a bit. Goldman Sachs is levered to bank trading, and the banks haven't been that good. Home Depot's having problems because it was weather-related last week. Boy, do we ever need sunshine. Now, IBM's in abeyance right here. Why is IBM in abeyance? Because we're waiting for the close of the Red Hat deal. ICE is just a play on volatility, which you've got it. Johnson & Johnson's holding at 140 despite the opiate trial that's about to come up. JP Morgan, again, hostage. We just don't know what's going to happen with that. Coca-Cola did have a good quarter. I prefer PepsiCo. McDonald's, it had an okay quarter. People don't seem to like it. Looks like 3M is trying to stabilize here, and that's because the yield has gotten so high that it's worth it to not sell. By the way, Nike, before you throw it out, remember the Ministry of Sport says they're a partner. They are not a China negative play. Pfizer is just Pfizer, even though they have 10% in China. Procter & Gamble, they did a great quarter in China. Travelers is domestic. You don't have to worry about it. UNH, it looks like the glow is off the $4 million buy by Wickman. Visa is one to buy here because if China does have a trade talk gain, remember they have 10% of their business is in China, but it's really a question of payments. Exxon, forget. We don't need more oils here. American Express has not come down at all after that great quarter. It is still vulnerable versus MasterCard and Visa. I very much prefer those. Caterpillar is not the stock to buy because, the president's keying on ABC. Apple, okay, the Boeing and Cat should have pulled out more from China. Disney, this is all about the earnings. I think the earnings are going to be a sideshow versus the movie slate. Dow DuPont, we've kind of just decided to throw up our hands. We've had it. They're killing us. We need more stocks, not just these Dow stocks and a couple of others. It's too pedestrian for me. I need more challenge.
And I'm looking forward to Disney's earnings tonight. That'll be exciting. We had Jeff Marks on earlier.
Oh, yeah. Bob Iger. I think there's a lot of people who are skeptical about the 2020 slate. Well, how about whether Iger's skeptical? I don't think he is. I think we'll get a very good feel. And let's not forget, theme parks makes a lot of new money, lots of money.
Oh, I'm already planning to go to the Star Wars line.
When there's a new game, anytime there's a new addition, well, the families, they make sure they go.
All right, Jim, so that's all we have time for today, but I do want to remind everyone that you have a fantastic call coming up tomorrow
so
at
important.
11:30. It's so important,
important.
especially with a market like this where it's flat, it's so volatile right now, and he's
Yeah,
going to teach you about portfolio management.
I mean, look at United Technologies. I mean, there you have Otis, which is so levered. Remember, they're splitting up to China, and it's up big today. Does that mean someone knows something, or is that just idiocy? Let's talk tomorrow.
Oh, I'm curious to see. All right, guys, I'm Catherine Ross. We'll see you tomorrow.